Good morning. Good morning. Hope you're doing well on this beautiful Friday. It is Friday, March 3rd, 2023, 10:34 a.m. And that's the Central Standard Time. I don't know how this is going to sound. I'm down in the kitchen, sitting at the kitchen table. Kid 3 has an e-learning day today, so he is up in the Fortress of Solitude. And I didn't want to be up there with him because, he probably would have been making fart noises and things, trying to get me to laugh. And, based on my maturity level, I'd be laughing and probably making fart noises back at him. So I'm down here in the kitchen. I have my back right next to the sliding glass doors, and we're expecting a wintry storm to be rolling in soon, and the winds are really picking up. So if you hear some weird noises, that's part of it. And then also I've noticed every once in a while the door to my screened porch is rattling, and I get to hear it because it's right behind me as well. Hey, enough about that, Bart. Let's get to the trades. Let's take a look at what's going on today on our expirations, which is we have 1, 2, 3, 4, 5, 6, 7 positions that are expiring today. If we look closely, you'll see that they're all doing well except one. Wow, wow, wow. So this 85 and 86, these puts are almost at full profit. Even though Blackstone is down a bit today, we'll take a look at that probably in the next video. The Devon is up, so that means these two puts are almost at full profit. And the Google put is at 93% profit, but that Google call is down 156%. And the reason is because Google is up today, and it's up above that strike price, that $93 strike price. We have 200 shares up for grabs that in a normal wheel scenario, so if you're using the wheel strategy where you're selling puts until you are assigned shares and then turning around and selling calls on those shares until they are called away. In a normal wheel strategy, you would just wheel back and forth. But I'm not normal. We know that part. You didn't have to tell us. So I'm not normal when it comes to much of anything, but I wanted to take a look at the Google just to see what it's doing, and based on what the trend is for today, it is up. It's currently at 93.53. So if we just let it ride, those would likely be called away today. But I thought, let's take a look at possibly rolling that out and up. Can we get to $94 strike and still have a credit on the call, on rolling that call? So let's take a look here at this position. We'll click on roll this position. Okay, so it does expire today. And this is the cost. So if I just wanted to buy to close, it would cost me around 65 cents times 2, so about $130 to get out of this position. So instead of letting it expire and the 200 shares be called away, then we would no longer own those. And instead of buying to close this position, let's see if we can't roll it out and even roll it up another dollar. So let's try to go for 94, roll it up another buck from where we're at, and still be in a credit. So let's see if we can just roll that out for a week. Okay, so we got March 7th, that's 7 days away. And if we look down here at the $94 strike, so if we rolled it up just a dollar, we could even roll it up to 95 if we want. We could roll it to 95 and still be in the money. In fact, we're going to go ahead and do that right here and right now. So we will roll it up $2 from 93 to 95. Okay, so what that could potentially do for us is if it's in the money next week, it's going to be worth $400 more than it is today in the money, right? Because we rolled it up $2, and that is $2 times 200 shares. Okay, so we like that position, and then we really like it because it's only 7 days away, and it's another credit. So that's currently trying to tell us $58 bills, $56 bills in our pocket right here and right now. To do that, it's got a low likelihood to fill So let's just fill it. That $54 credit, we like to put that right into our pocket because it's 54 more dollars than we've had. Roll it up $2 more. So that increases our potential profit on this wheel strategy for this particular asset of the 200 shares that would be called away today at $93 bills. So let's review that order and let's roll the barrel. Let's do that. Let's see if it can get filled. And it did. So there you have it. We just did that, accomplished even more than what we were anticipating. We not only rolled it up $1, hey, we rolled it up $2. So Google is still our friend. We don't have to own it, but I like to look at the wheel strategy for the entire month of March, and then I'll be sharing those numbers with you probably on a weekly basis, depending on what's going on. So let's take a look back here. So that will now be off the board as far as the expiration of 3/3, and we pushed it out till next week. Where's it at? We pushed it out to next week right there, $95 call, 2 contracts, and we also have an 89 put on Google, and then this action right here. Looks like we have some AbbVie next week as well, so we'll keep an eye on all those. We already have a couple credit spreads on the board. So today's expiring SPY spread is between 406 and 408. If we take a look, if we spy that with our little eye, you can see what it's doing now. Okay, so it's been up. It's up today, $3.36, so 0.84%. It would have to climb a lot to get to those strike prices that would then cause us to lose money. It'd have to go all the way up to $406 between now, 10:41 a.m. and 3 p.m. So the likelihood is very low of that, but we will continue to keep an eye on it. But in the meantime, is there a position that we can take right here and right now that expires today that we might be able to collect a couple dollars? And in the week, in a nice green for the S&P we have the 30 trade challenge, because I don't have next to no experience is what I have in trading SPY credit spreads. And you've been watching me do it live. You've been watching me do it live, which I appreciate. And I appreciate that you are subscribed. Hopefully, click that subscribe bell if you haven't. You're liking these videos, and then leave me some comments. I'd love to hear from you. So if we look at this, we are now basically, bouncing up and down. Let's see, at about 401.50 and maybe down to what? 400? No, it's not even been down there in a while, has it? So about 478 cents all the way up to $401.51. That's kind of the range that it's been working in for the last couple of hours. Now, I haven't figured out how to change the time yet on this, but that's the Eastern Standard Time you see there down there at the bottom. So from about 9:30 a.m. Central all the way until now, it's been less than $1 wide. So our thought would be, because it is up today, the potential for us to collect more premium would be on the call side. So let's just take a look. Let's take a look at it now. In fact, we'll look at both. If you have time, we'll do that. We'll take a look at both the call and the put side of this spread that would expire today. That would be March 3rd, 0 days to expiration. If we looked, again, we like to see the 90% chance of profitability, which puts us around 10 delta. So this would be exactly at 10 delta. 25% implied probability. So that is not a high number. So at this point, they don't expect it to move a great deal as well. So if we did that, we would be at 10 cents. And then if we bought it back 2 strikes, would that go to 3? Yeah, it goes to 3. If we really wanted to be crazy, we would buy this 407. We'd have a $3 wide, so that would create a $300 collateral per contract for only $9 bills on the profit. But our chance of profit is high, right? So it's actually changing on us, isn't it? It's down to 8. Our chance of profit is high. The probability is high. And based on where the market is trending right now, I don't think it's going to reach 404 today. You never know. You just never know. It could really rocket up. But we're going to go ahead and just we're going to put a couple on it. Let's put a couple contracts on it. Let's see if let's try to get that 9. If we can get that 9 strike. Right now it's saying low probability, but we'll just let it roll, because if it candles down just a couple reds, which it will between now and the end, see it candle down pretty good right here. The big red candle. It's been wavering back and forth. So we'll see a couple more reds before this day ends. And maybe, just maybe, if that happens within the next 30 minutes, then this will fill at the 9-cent credit, 2 contracts, $18. If we review that order, we're going to hold $600 in collateral because, again, it's $3 wide, right? So we got a 404. We're selling and we're buying back a 407. The difference in that is $3, and it's 100 contracts or 100 shares each. So that's 300 times the 2 contracts is 6. Ooh, it's up to 10. Let's just go ahead and see if we can't fill that right here and right now. Oh, I clicked off it before checking, so it must be going green right now. Yep, green up. So that's why we might be able to get that 10. According to my phone, it was executed, so we were able to collect $20. And then the risk is that it just keeps going up green, and we go through that 404 strike that we just set. So then if we look down at the sell put, if we looked at the other side, what kind of action will we be at a 10 delta? Excuse me. So that is sell put expiring today. And a 10 delta would be right around this number, 398. It's an 11. And this one's probably going to be, an 8? So that's an 8. So if we were like, hey, sometimes you got to risk it for the biscuit, and you went with this 11 delta at a 398 strike, you would collect a 14-cent credit, right? And then we would sell, or buy, I should say we bought down here at the 396, that would probably change this to a 5-cent. And it does, so that's a 5. So we would be around the same credit as the call spread, but we'd be on the other side of it on the put. And according to what we're seeing, it's probably not going down to 398 today, is it? Now, anything could happen between now and then. I don't think there's any real economic action going on between now and then. Well, there is. We got this Fed speaker barking out his commentary, and then Fed Bowman, a couple of these guys are talking today, and we don't know, do we? We don't know what they're going to say. Are they going to be hawkish? Are they going to have a little bit of a dovish query? So that is definitely a risk, and that's part of the premium is in that risk, because whatever they say could push it up, and it could easily push it down and risk this type of put credit spread. So, or it could just continue to do what it's doing, which is go sideways as well. So let's just go for it. We're at a 398. It would take some retracing to get there. It's a low likelihood to fill at 10 cents, but we're going to try it anyway and try to get that filled, which, again, if it on the put credit spread, if it's going to go red, if these candles start to go red, a couple reds in a row, then it will fill at the 10 cents, and we'll collect $2 or $10 on that. So that's where we're at. We should show one pending up here. So we got one pending at the 396/398, and then we did fill the 404/407 on the call credit spread. So there we have it. A couple things going on. We did the Google roll. We rolled out the barrel on that and put a couple more SPY trades in action, and I'll tally all of those up into a spreadsheet, share them with you over the weekend to see how we did on our first full week in the SPY credit challenge on our credit spreads. So thanks for tuning in. You know what to do. Make sure you are indeed a subscriber. Like the video, leave me some commentary, share it with a lovable friend, and I'll see you in the next video.